Thursday, June 13th, 4:49 p.m. New York time. Welcome to Winning Wall Street's Money. U.S. stock markets close. The futures market closed in about another 11 minutes. Going to go over the S&P 500 top down. Some people are very uninformed of the S&P 500 top down. The S&P 500 is a stock index. It's the most important stock index for equities. Equities is another name for stocks. You have single stocks representing a company, and then you have stock index that represent two or more companies. The S&P 500 are the largest publicly traded companies. Go to index. You want to perform your performance check to see if your investment portfolio is performing equal or better. We're looking here at three grids. On the left is stock symbol Sierra Papa Yankee SPY. That's a stock ETF of the S&P 500. Closed at $542.45. And then you have the SPX in the grid in the middle. The SPX is the cash index of the S&P 500. Cash index, meaning that cash trades from the 9:30 a.m. to 4 p.m. Same with the stock ETF. Got it? There's a difference. The SPX cash, you cannot physically trade this. It's an index comprised of 500 companies that are in the S&P. So if you want to trade this, you could trade the stock ETF SPY. Again, this one is 9:30 a.m. to 4 p.m. And before there was a stock ETF SPY, you would have to buy the individual companies, all 500 of them, to have that performance equal. And some investors grouped their money together, started a company, and made the stock ETF. S&P 500, referred to as spiders. On the right here, you still see some prices moving. This is the S&P 500 futures. There are different futures exchanges. The ES/ES trades on the CME exchange. Yep, prices are slightly different. The margin requirements are different. The leverage is different. Again, each of them are daily. Again, the ES here closes 5 p.m. New York time. We still got about another 9 minutes. Duration of this trades a lot longer. Trades overnight. It's the futures. That's a derivative. All three of these have options that trade on them too. Options are a form of derivative. So we gapped up here yesterday. Yep, on the S&P 500. And today we tested the top of that gap, that orange horizontal line. So now I'm going to remove this. We also closed red. We made a lower high today and a lower low. The trend reversed. Maybe we'll get this gap filled. So on the right, the daily inside candle, that means the high and low we're not taking out on the S&P 500. Big green candle, S&P 500, labeled the body, midpoint right there. We tested it today, broke below it, and trading currently above it. The futures, they trade longer hours, so there's more data, more price action. Let's go to the S&P 500 top down. This is a 20-year chart. Each candlestick's a month. Since today is the 13th of June, we're almost halfway through the month. Look at this. 20 years. Actually longer. All-time new high this year, this month. Outstanding. The S&P 500 is bullish. It's a beautiful thing. All-time new high. If your investment portfolio is not performing equal or better, get out of it. Own up. Don't stay with it. If someone else is managing it, fire them. Either take care of yourself or find another professional that will own up and do better. No reason, logically, if you know better, You should be staying in a performance portfolio that's performing worse than this. No excuse. No excuse. If you're trying to perform better than this or equal to this, you should be in this. So if you're in an investment portfolio that's diversified, 2, 3, 4, 5 different indexes, bonds, equities, well, then again, look at those equities, those individual. If none of those are performing equal or better than this, get out of them. Because if you're in an index, you're already diversified. You don't need to have 2, 3, 4, 5 different mutual funds. Each mutual fund should be diversified. Okay, you get one good one. Yeah, it should be performing equal or better than this. And if you just want to have two, well, then go to that one that's fixed income, high yields, earning income monthly, high yields. And that wouldn't be in stocks. That would be in treasuries, bonds, CDs. Yep. You don't need to be in every sector of the United States. Again, they're not all performing good. All right, enough of that. Let's continue. Now we're looking at a 5-year chart. Each candle's a week. And we have one more trading day left for this week. Show you some insights. You have the trend from here. This was the low of this year, right here. This yellow horizontal line, the low of the year. Huge momentum to the upside. Consolidation. We had a retracement. Reversed, went up. Minor pullback here, retracement. And then we reversed and continue going higher. Well, from here to here, I'll show you on Fibonacci from here to the top of that candle. Zoom in some more. So the bottom of this candle, the top of this candle, that's a trend. We did a retracement on this red candle, and we traced to this green horizontal line. That's 0.382. That's it. We only did a 0.382 retracement of this trend. That's a minor retracement, and then we reversed. So what that means is the probability is that from this distance from here to here, from there to there, it's approximately 404 points, a little bit more, 404 points. Got to remove this. So if I take the low from here, which happens to be almost a bullpen bar, take that low, 52.05, and add 404. It's projected to go up here. Yep. So we have a lot more price to continue going to the upside. That's good. Outstanding. May not go directly up there. It could do some consolidation without taking out the lows, as long as the trend continues. Outstanding. Looking at the daily chart now. Look at these boxes I drew. Big consolidation here. Breakout, consolidation, breakout again. Yesterday, that big green candle. We have 2 more minutes before this yellow candle gets done. So we didn't take out the hive yesterday. But notice today that little body and the big wicks on the top and bottom, little body dodgy on top of a trend inside that prior candle simply means that the market has an indecision. It doesn't know if it wants to go higher or lower, but it's suspicious because it's on the top of this trend, a little dodgy, very suspicious. Yep. And tomorrow's Friday. Maybe some people take some profits. Maybe some new investors come in. Again, this is the ES. But I want to compare this to the cash index, SPX. What did it do? It made a lower high, lower low. I showed this before. So again, there's a divergency. Divergency on the cash index versus the ES. Futures. Let's go to the 4-hour. Here, 20 days, the 4-hour candle. Again, the current one will be done at 5 p.m. But this is the past 5 days. Here we go. The past 5 days. Actually, put in the past 10 days. Past 10 days. Here's the low. Here's the high. A lot of whipsaw, but constantly had these big breakouts, consolidation, breakout, tight consolidation here, building a lot of energy, had a breakout. That's what's doing here. Consolidating, building a lot of energy. Gray zone I drew around that big round number, 54, 40, 54, 50. So you have some sellers there. Some people willing to not step up to buy more. Yep, there's sellers there. And then when it did that retracement right here to midpoint right there, we have some buyers stepping to buy it. So that's a tight consolidation range. Okay, resting, building energy. That's always. Thank you for spending just a little bit of time with me. That's it for the video. Thanks for watching.